Let me see what I did. Audio echo. Okay, I got you. Okay, hopefully we're fixed now. Give me a comment. Let me know if the sound is okay now. Should be okay. Yes, I'm reading the screen. Okay, perfect. Let's go back anyways to this loan pad statistics screen. Again, you can see here live loan number at 107, liquidity less than 1 day, loan to value still at 41%, which is important, and 38.3 million pounds of loan pad loans against a total loan value of 81.6 million pounds and a total security value of 93 million pounds. Again, I'll just repeat this because I'm sure that echo was terrible. Louis is going to be here October the 7th. That's Thursday, October the 7th. I believe I got that date right. Put it on your calendars. Come check out Louis. We're going to have a good chat with him, find out what's going on with LoanPad. And again, Narinda from Kuflink here. By the way, read that again. Narinda will be here October the 14th to talk about the accounts and what's going on with those accounts being late and what's going on with Kuflink. We're going to get an update. Again, sign up today. Get yourself $4,000 in cash back if you're a new investor. Terms and conditions do apply. Capital is at risk. Thanks again to Kuflink and Narinda for sponsoring this channel and a lot of support they've given to the Financial Thing website. Back to it. Again, Crowd Property unveiling this pre-planning permission finance product. This is going to be financing to help developers who do not yet have planning permission, and but they are going to make the developer take out a planning cost insurance policy in case planning permission is refused. Again, not kind of difficult to put into a risk factor of where this sits because pre-planning permission, lending is considered quite risky. But with this insurance policy, how that's going to cover that loan, we'll have to find out more details about it, but we'll open up the doors for Crowd Property to be able to lend to more developers, which is cool. We'll take a look at that when it comes out. So, I probably would imagine that interest rates are going to be what they have been with Crowd Property, very much the same. I'm personally not a big fan of lending on stuff that doesn't have planning permission, but again, it really depends on the intricate details of this insurance policy that's going to be in place in case planning permission is refused. Let's look at this. Wellesley & Co. widens its losses as it winds down the business. No surprise here. They reported a pre-tax loss of 1.02 million for the 12 months to the 35th of December 2020 compared to a pre-tax loss of £400,000 the previous year. They lost a lot of income, down from 3.9 million in 2019 to 890,000 in 2020. Hence, obviously the business was failing, and those tax statements show that. Digital bonds launched to finance affordable housing. I just wanted to showcase this because, digital bonds, you gotta be very, very careful if you're somebody that's wanting to consider taking a bond out through a private company. Buyer beware in all cases. I don't care who it is. The only really safe bonds are ones that are offered by governments. The rest of them, you are taking some amount of risk, sometimes some significant risk, and the risk rewards are usually misaligned. A lot of cases, the bonds are just not paying back anything close to what kind of risk you're taking. So just be buyer aware when it comes to digital bonds, even if it does have real estate involved. LendInvest sells £100 million buy-to-let portfolio to JP Morgan. This is something that LendInvest does. Sometimes they package up loans, move them on, and generate a profit from that. It's really an effective way of generating revenues. I think this is the third or fourth time that I've seen LendInvest do that. And obviously they must be considered good buy-to-let loans for a company like JP Morgan to want to take them. That's an institutional grade company, and those loans must be considered pretty good. So LendInvest, again, one of the companies I consider very solid. Again, not financial advice, but somewhere I'd be comfortable putting my own money into. Now, this is a very interesting article. It's been a lot of things happening in the cryptocurrency space too. We're going to be talking about that. You've obviously seen a lot of volatility over the last 2 or 3 weeks, but as I always say to you, blockchain technology is going to be the future. Absolutely. And here's a perfect example. You see the FCA is going to implement blockchain to quicken up compliance checks. Now, they're going to be implementing blockchain and API technology and machine learning. They want to make compliance checks quicker. See, that saves them time, saves them money. But the point being here, when you see companies like the FCA embracing blockchain technology, this kind of goes in what I've been saying for a long time on the stream, that blockchain is here to stay. The technology behind cryptocurrencies is going to be the future of computer technology, and how information is accessed, how quickly it's accessed, and it's going to be accessed for cheaper, faster. Everybody will benefit. It just has to be implemented. Now you're starting to see companies coming on board, governments coming on board, and hence you will see an increase in the values of cryptocurrency as more and more of these blockchain technologies are implemented. So don't sleep on this, and like I've always said to you, it doesn't matter to me whether you buy cryptocurrency or not. What matters to me is that you win. You know, that we're a community here, and we want to see everybody in the financial thing family win. And cryptocurrency, I believe, is a way to win. And you're in the very early stages, and this again just goes to show the ways that it's being implemented. So, you know, it doesn't matter to me if you buy Bitcoin or not. That's completely up to you. I own it. I believe in it. I think it's going to be the future, you know, in some way, shape, or form, as will other cryptocurrencies. But that's completely up to you. Do your own due diligence. Do your own research. I just tell you what I do personally and what I think the future holds. Here we go. Check. Peer-to-peer platform offers Bitcoin-backed loans. Again, another implementation of the demand for these Bitcoin products is huge right now. There's a lot of people, a lot of investors that want exposure to Bitcoin. They want to be able to offer, to be able to buy loans that are backed by Bitcoin. So Bonster is one of those companies that does that. I don't really mess too much with the European crypto companies. So again, they're kind of a very early adopter of using crypto within peer-to-peer. But I think you're going to see more and more and more of this as time goes on. 2021, 2022. So just another example of how this is being implemented. And there was an interesting article in the peer-to-peer finance news about, is crypto-backed peer-to-peer lending a flash in the pan? It's a very simple answer. No, it's not, because as long as people want it, these companies are going to start offering it. And people want it. People want cryptocurrency. I'll show you why. See, this week PayPal, actually this is back on August 23rd, but now PayPal offers the UK, uses the ability to buy, hold, and sell cryptocurrency in the UK. Obviously, PayPal implements it because people want it. It's there. The demand is high. One thing I want to tell you, if you're thinking about buying on PayPal, be aware that it's not something I recommend. It's very easy. Problem is, they don't offer a way for you to withdraw that cryptocurrency. You can sell it, which you will have to pay tax if you make money on it. But if you want to withdraw that crypto and put it on your own wallet, like a Trezor or a Ledger, or move it to a different platform, you're not going to be able to do that yet. I fully expect PayPal will offer the ability to withdraw that cryptocurrency. But this was launched on September the 17th. So if anybody has bought cryptocurrency through PayPal, let me know in the chat. I'm interested to know that. But other big news, September the 22nd announced Robinhood, which is a huge trading platform in the US of A. And crypto is very popular, and they are currently working on offering a wallet within Robinhood for all the people that own crypto to be able to withdraw their cryptocurrency coins. Now, this is a huge deal because Robinhood is firstly a massive platform, but a lot of people don't buy cryptocurrency on Robinhood because of that inability to be able to withdraw those coins. And what this is going to do, and this is probably not going to happen until early 2022, but it's just going to create more exposure to the cryptocurrency space, and it will create more comfort that people know, hey, if they own Bitcoin or another cryptocurrency on Robinhood, they will be able to withdraw it. So that is pretty exciting. If you're in the US, you can join the wait list to get access to a Robinhood wallet. Big news again. And also, Twitter is going to let users send and receive Bitcoin tips. Again, Jack Dorsey, who is the CEO of Twitter, is very, very pro-Bitcoin. He's appeared on many talk shows talking about Bitcoin, very early adopter of it. And Twitter is going to allow tipping now in Bitcoin. So again, just more exposure to the cryptocurrency. Again, you're very early on. You're just going to see more and more companies doing things like this as Bitcoin becomes more adopted. Let's take a look at the coin market cap today. What's going on with Bitcoin? So we're down about 5.93% for 7 days. It had a lot of volatility, and today the price is $44,730 US dollars. We're up about 3.16% today. Ethereum up about 3.87% for the 7 days, down 11.72%. So if you were a buyer at those points, you had a really good entry point. I was able to buy some Bitcoin around 40,000 US dollars. So still cheap. Again, this is early adopting days, not expensive. Happy to buy Bitcoin at 40,000. I think, you're coming into the end of the year now. We're looking for this bull cycle to really take off for November, December, the last 2 months of 2021, which I think you will see. But some really, really great buying opportunities, some crypto coins over the last 7 days when we saw this drop from 48,000 all the way down to, I did see it go into the $39,000 range at one point. It jumped very fast, so, and then we saw this big pullback on Ethereum. Again, that volatility is your best friend, even though it looks to be a scary place if you're an investor and you watch your Ethereum go from 3,500 all the way down to $2,769 in just, a matter of less than a week. Gives you the heart attack, right? But the volatility honestly is your best friend because it gives you an opportunity to get in at these lower prices, to cost average in. If you're a buyer and holder like I am, I take those opportunities to come in at these low points and just to accumulate more. And once you see the prices start to really take off, you're going to be wishing one day that you could get in at these prices, especially, Bitcoin, which I consider the safer product. Being able to get in at the $39,000 price point within the last month has been a good spot. So you see right here we're at $52,000 on September the 7th. So 3 weeks later, it had shed 12,000 off its price. Big opportunity to buy in. Again, a lot of room here, a lot of growth room. So happy about that. Let's take a look at the trading portfolio. What did I do this week? Well, I had some cash sitting on the sidelines, and I thought, you know what? I saw some opportunities and some, we had this little bit of a pullback in the markets, and what I thought was that the US Fed, is going to be speaking this week about, everybody was worried about the tapering. There was worries about this Evergrande situation in China, which I thought was kind of a bunch of BS because we've known about this Evergrande situation for the last year. and all of a sudden the media picks up on it and starts throwing this news about failure. So people saying, well, the market's reacting to that. I don't know if it was that necessarily, but it was a great opportunity to get in at some lower prices, which I did. Let me show you what I did with the portfolio. Again, for anybody watching, this was a 5,500 UK pound portfolio to begin with, and where the account value now is 13,897. I'm hoping that by the end of today or tomorrow we'll hit 14,000 pounds. So we'll have booked about a 9,000 pound profit on the portfolio, a little bit less than that. So 10% of that is going to be a good charitable donation. But what did I do this week? It's 20th of September. I decided, right, it's time to go in. So I bought some more Laredo Petroleum, bought Occidental, bought some Palantir software, bought more Centrus Energy, bought Vermilion Energy. You can see here 3 different trades of Vermilion, and bought Hut 8 Mining, which is a cryptocurrency mining company, which has been pretty volatile. I've seen it fluctuate, 7, 10, 13% in a day. So I went in on one of the low days, and here's how we're doing right now. Again, we're just a little bit under 13,900 pounds on the portfolio. Centrus Energy up 21.8%. Facebook. Oh, by the way, I bought some Facebook. Facebook was kind of a shouldn't I trade, because I do believe in the long term of Facebook. Facebook has absolute control of social media with regards to the Facebook app, and then you got Instagram, which is huge. They're just going to keep making a ton of money. So I bought some Facebook. Terrible timing, down 7.7% on Facebook. Some you win, some you don't. Hold that. Hut 8 Mining up 11%. This is again over what took about 3 days, up 11%. Laredo Petroleum's the total here. I already had some Laredo holdings, but we're up almost 70%. The 20th we bought in at, what was the price? Bought in a little bit under $70, and now you can see already up to 81. US oil, crude oil is just going to keep on going strength to strength. We did see some weakness in crude, but that's just going to keep getting propped up, especially with this talk, the Fed saying, well, they're not going to taper now until next year. We knew that wasn't going to happen. They can't stop the money printing, and oil is very connected to that. So oil prices are going to stay strong. And when eventually this market does topple over, because it will, oil and gas prices are going to stay high. So I fully expect these energy companies to do well. See, Lloyds Bank has done a little better too. Over the last month, we have gone from this low point of 41p back up to 44p, so up 77% on that. This Microvision has not done well at all. We're down 41% on that. That was a bad trade, but have so little of it, I'm just going to hold on to it. Occidental, again, this was a stock that I owned before I sold everything off, which is obviously another timing mistake, because the stocks that I thought were not going to bounce back for a while did, and they ended up coming back very quickly, but that's okay. We sold, booked a profit on the portfolio, and now it's up 8.58%. Olin, US chemical and weapons ammunition company, up 7%. Again, small holding in that. Palantir up 2.65%. This was down, I think, about 5 or 6% at one point. So you can see I went on the 20th, up here at $28. Of course, thing drops down to 26. Of course, the day after I buy it, but now it's bounced right back up again. Tullow Oil not doing very well at the moment, minus 14.2%. Again, I fully expect that to bounce back. It's a riskier investment, small company, but I think that will do well as oil prices continue to climb. And then we got this small play here, this risky stock, Vermilion. VET is the sticker or ticker, and that we're up 14.82%. Went in at $7.26. Now we're up to $8.38. That's again going to be a very volatile stock. We've seen that go up and down 8-9% in a day, but over the long term, over the next couple of months, I fully expect that to do well. Again, not financial advice. None of this is. I have no idea what I'm doing. Just what I'm doing with this portfolio. So please do your own research on that. So what do you think so far? Portfolio doing well. Again, the better it does, the more money I can give away to charity, which is really what I want to do. Let's see what else. Yeah, again, if you have comments, just pop them in the chat. We'll do a Q&A at the end. Let's talk about precious metals. That's going to be our little go to school today. Precious metals and why you want to own them. Precious metals versus Bitcoin. I don't know. You know what? I've never been a fan of gold. I really haven't. Even though my dad was a jeweler, I like wearing it when I was young. But as far as an investment, I never thought it was a particularly good investment. So let's look at our presentation today. Precious metals. Should you invest in them and why? And which one should you invest in? And versus Bitcoin, we're going to take a look at how these precious metals have performed. Now, what I've noticed about the charts on these precious metals, I looked at particularly gold, silver, and platinum. Also palladium, again, more volatility in that. But I noticed they're very, very both highly dependent on market timing. So depending on when you jumped in and jumped out, obviously your returns on all of these precious metals are going to be very much different. And the same with Bitcoin. Each of them has different risk profiles. Like gold would be considered the safe haven of precious metals. Silver, a lot more volatile. Platinum, a lot more volatile. Bitcoin, very, very volatile too. So different risk profiles. Extremely different returns. Again, depends on when you bought in and got out. You're going to see some numbers are very interesting of buying points. How your returns differ when you pop in and out. Again, same for precious metals as it is for Bitcoin. And what are the future possibilities? What could we expect to see in the future? Again, are we going to see a lot of advancement in the precious metal world? No, we're not. We're going to see a lot of advancement in the Bitcoin and that blockchain technology, which is going to have a big effect on the types of returns that we could expect on cryptocurrency versus precious metals. Now, one thing I will say is I'm not saying that you should get into one or the other, and I don't think it's wrong to get into both of them. But I want to show you some of the numbers on what you have seen historically and what you will see in the future, just so you can be aware. And I think having a diversification play into both is not a bad option. You know, it's not something I really invest in. Precious metals, I found I've got a gold stock. It's actually two gold stocks that have really gotten hammered over time since I bought them. One of them is down 27% Barrick Gold. Doesn't mean to say that if the markets topple over, those gold stocks are going to be more protective or are going to perform better in the future. We just don't know. But, you know, you have to make your own decision about what you think. So both are very highly time dependent, as I said. In gold, you can see the chart here. This ranges back from September the 21st, 2011. That's a 1 year chart. You can see if you bought in here at this point in 2012, which is about $1,750, you would have had almost 10 years of zero gains. And again, with some volatility here of gold dropping off into this dip from mid-2013 all the way up in 2019. So that would have been 6 years of actually losses on a gold purchase if you'd have happened to buy in here in 2012. Now, a different story if you'd have come in down here at 2016, you would have seen some decent returns. You would have been here at about 1100 US and up to its point over $2,000. So again, very highly timing dependent on precious metal gold, like Bitcoin. So again, Bitcoin highly time dependent too. If you'd have bought in here in 2017 around December, at a little bit under 15,000, you would have seen this drop off down to 2019, where we went a little bit under $5,000. So again, very highly dependent. Again, if you'd have bought in here at the low point as an early adopter, you would have done very well. And if you'd have got in here at 2019 at the $4,000 price, you would absolutely be very happy now. But again, very highly timing dependent, just like precious metals, so no difference there. Now, these are some numbers. What I wanted to look at was January 1st, if you'd have bought at the beginning of the 2020 new year, that was the year we had the market correction, the vid market correction in March of 2020. And what you would have seen here, gold was at $1,576 US an ounce, down to $1,476. So you saw a negative 6.3% loss during that time. Now, this goes to show you how much more protected gold is versus other precious metals. Silver took a beating of minus 31.8% during that time. Platinum, even more of a beating, 38.6%. But very interestingly, Bitcoin only took a negative 11.2% loss from January 1st through to that market correction, which is, it started to come out of the correction on the 19th. That's why I wanted to have a little rebound information in there too. But only an 11.2% loss on Bitcoin. So actually Bitcoin performed second best after gold during those periods, which goes to show the volatility levels on some of these precious metals are actually very, very severe. You know, this financial advisor that I spoke with is saying, Lawrence, you know, precious metals are definitely more, you know, more safe than cryptocurrency. And I'm thinking, well, the numbers don't show that. Again, this is market timing dependent, of course. Probably likely that nobody happened to buy in all their cryptocurrency on January 1st. But I wanted to give an example of a timeline of how those metals and Bitcoin perform. Now, this is a recovery time when March the 19th through July 1st, we saw things really recover. And you're going to see a recovery of 20% in gold, 114% in silver, 83% recovery in platinum, and a 47% recovery in Bitcoin. Again, Bitcoin was number 2 in the recovery amount. And again, that goes to show that sometimes Bitcoin isn't as volatile as people necessarily consider it to be. Of course, you're going to see those drops of, you know, 5 to 10% over a couple of days. But Bitcoin did recover well, and gold also recovered well over those periods. But look how volatile silver was, 114% recovery if you happen to buy on that March 19 buying point. That is absolutely crazy. Sorry, that was the January 1st price up to the July 1st point. So just ignore that date. That's wrong. I should say January 1st. And now we're going to look at the recovery again from January 1st to September the 22nd. Now this is where you're going to see Bitcoin absolutely fly. We saw just a 12.2% return total from January 1st of 2020 to September 22nd of 2021. Silver, 87% total return, and platinum, a 68.8% return. Now Bitcoin, 598%. Absolutely a huge return on Bitcoin as it really started to take off through 2021. It was getting more exposure in cryptocurrency to the general public, and the price just continued to explode. So what are the long-term possibilities? If we look back historically, we can see here the numbers of gold, silver, and platinum from January 1st, 2000 to September the 22nd, 2021. So gold, you would have gotten a return of 542%, which is pretty damn good. Silver, 648%. And surprisingly, platinum, only 112%. So we saw the price of platinum on January 1st, 2000. Of course, that was, you know, time when the markets were really struggling. What happened with the .com situation. But platinum, $472 up to $1,003 US an ounce. and only 112%. So you've only seen 112% return over 21 years, which is really it's not bad, but it's not very good if you calculate it out per year. Now Bitcoin, this was the one that obviously did the best. We had a 23,690% from August 2011. I graphed that up till yesterday, September the 22nd, 2021. So obviously some major upside in Bitcoin. A lot of people say more risky, less known technology, less known investment vehicle. But if you're matching this against precious metals, Bitcoin absolutely smashed it and did really well. So what does that really tell us about precious metals? It says that gold could absolutely be a safe haven if the markets roll over backwards, because we did see less of a drop during that market downturn in March 2020. So if you do want to have some hedge against an equity downturn, storing physical gold could absolutely be that hedge. But you can also expect that you are not going to see some real high returns on gold. Of course, there's no telling in the future, but I think you're going to see very, very flat appreciation on the price of gold unless something just dire disaster happens in the economy, which is, again, very possible. We don't know. Governments are going to keep propping up these economies because they cannot stop the money printing. As soon as they do, these stock markets are going to crumble because the economic news keeps coming out as worse and worse and worse. But you also have to have that emotional, if you're a gold investor and you say were to buy in this, see 2011 up here at $1,700, you would have to sit here for 10 years of no gains and not to have sold your gold. So you have to be very convicted that gold is something that you want to hang on to. Personally, if I'm looking at something that's sitting there for 10 years and I've got some significant amount of money invested in it, I'm probably not going to hold on to it for that long just to watch zero appreciation. I'm just not. But again, if you happen to be lucky to buy in at these low points, then you would have been quite happy to sit on your gold for 5 to 10 years and seen some of these price increases through here. But personally, I don't think you're going to see a lot of price increase in gold. I think it's becoming a less popular place to put money, especially with the younger generation coming in now. They want to invest in equities. They have far more risk tolerance. Gold is not something that the younger generation is interested in investing in. They want those returns. They want cryptocurrency and they want equities. Older generation, probably more likely to sit on some gold as an asset protection if the markets do topple over. But very interesting numbers on what those precious metals did during those market dips. I was really surprised about how much of a beating silver and platinum took, especially silver. I think silver is probably undervalued precious metal at the moment. Probably some good opportunities in the silver price range, but again, not really my bag as far as investing goes. But I did want to show you those numbers. So if you are thinking about, well, cryptocurrency is so volatile, well, you know, it didn't get crushed that as much as you might have thought if you bought it in January 1st, 2020, down through the correction. So very, very interesting numbers. And yeah, that's what I got for you on the precious metal side of things. So we'll have a look at the comments. Again, if you can hit that thumbs up button, just do it. Just hit the thumbs up. You're going to hit thumbs down too if you don't like the stream, but hit the thumbs up. Show me some love. It helps me with the YouTube algorithm. Again, October 7th, Louis, Loan Pad. Come here, watch. Okay, let's see if you have any interesting comments. I know I cocked up the sound. I'm sorry. It's just what happens. Sometimes, I'm a human being. Sometimes I cock things up. I get excited. What happens is I had the YouTube watch page open, and I guess it was echoing through the system. Darren says, another classic live stream experience. Thank you. I try my best to entertain you. So yeah, I've had some questions about investment fund. I'm doing some due diligence on them at the moment. I don't have any conclusive evidence that it's somewhere I want to invest, but maybe in future. What's my thoughts on PayPal becoming a crypto platform in the UK? I would want to see them have a way for people to withdraw their crypto. I don't like buying crypto on a platform where I cannot take the coins off if I need to. But I think it's a good thing in general. PayPal is a good company, and they're trusted, so it's going to bring a lot of good exposure to millions and millions of users, and it should help the price of crypto and Bitcoin increase. Yes, you can invest in the UK. Orlando Podcast says you should get on the Orlando Podcast again. I should. You got to invite me. I'll come on. Yeah, and Coinbase Pro is going to be cheaper to buy your crypto because you can't get on Binance maybe at the moment. Coinbase Pro 0.5%. PayPal, I think it's 1.5% in fees. But you can buy crypto if you're a UK resident on PayPal. You just have to tell them you're not a US taxpayer. See here. Let me just check on that. Wasn't it Palantir who bought 50 million in gold bullion recently? Yes, they did. I think Palantir has some really good software products that are pretty groundbreaking, so we'll see. Bit of a risky play. A lot of options traded on Palantir, which can make it a volatile stock, but I think it's going to do well. BP is raising. Missed out on Dark Trace, up 40% in the last couple of weeks. Dark Trace. Yeah. Hey, scared money doesn't make money, right? Oh, and by the way, the precious metals, the prices are totally fixed. There's a couple of well-known US banks that have been slapped on the wrist many, many times for rigging the prices of precious metals. So you're in a rigged market. Mike says precious metals are affected by a much wider range of factors than crypto, so comparison is quite a false one. Yeah, I think for me it's about where can I get the most appreciation on an asset, Mike, which is why I compare how much you can actually get on precious metals, because you'd be surprised how many people I've spoken to think that precious metals are a way to get a really good price appreciation, especially gold. And I think it's a very old school way of thinking. I don't think precious metals are the best way to turn your money. But yes, of course, they are absolute apples and oranges. Quite aware of that. But the goal is, with investing, you just want to see where you can put money that you think in the future is going to increase. And I'm just not sure the precious metals are going to well, actually, I'm not sure. I'm 100% sure the precious metals will not outperform cryptocurrency in the future. Cryptocurrency. Darren says, I think cryptocurrency is a speculative investment rather than a safe store of value. Do you think, so question is, if you've seen these high price fluctuations of anything other than gold, would you consider silver something that had gone down 31% necessarily a safe store of value? It's safe in that you could take that, if you own the physical silver, you could take it to a shop and sell it, liquidate it, yes. But as far as it being a safe store of value asset-wise, financially, not necessarily. Not necessarily. Dave Dawson says, do not invest in gold as long term. It's a waste of time. Yeah, it's really a hedge. I think, again, a lot of people are looking at gold as a hedge for when the markets turn. Gold will be protected against a downturn, kind of like a bond would be versus equities. So it's more of a safe haven play if you're worried about your equities. In the UK, inflation up, no HGV drivers, fear of fuel shortages, empty shelves in supermarket. What has gone so badly wrong? But hey, let's just blame it on the illness we cannot mention. There's just so many things that are going wrong right now, and I've said it before, the economy is not in good shape. No matter what you're going to read in the media, I see these news stories coming out every day that show positive light on the economy, especially in the US. And instead of 350,000 people as expected filed for unemployment, we only had 335,000 people file for unemployment. This is good news. And it's not. The economy is in dismay. And all these things that are happening is just part of the bigger picture of why the economy is in trouble. And eventually it's just going to come home to roost when the money printing stops, if it stops. Every day that we get more bad news, I don't know if you've noticed this, but when we get bad economic news, the stock markets are loving it and the stock markets are going up. Look at the highs right now that we're hitting. It's absolutely insane. Because when the bad news comes out, it means the governments can't stop money printing. They cannot do it. If we get these great economic numbers that come out, then the governments will start looking at when they can start tapering down, but it's not happening. Crypto went down with the markets this week, so safe haven argument weakened, seemed as risky asset. Yeah, absolutely. I'm not saying you're not going to see those fluctuations. If the stock market corrects, you're going to see cryptocurrency under pressure exactly the same way. That's not what I'm saying. What I'm saying was for future price appreciation, you're going to see cryptocurrencies be a lot stronger than, I think, precious metals, and certainly some equities, definitely bonds. But you're going to see when those markets turn over that crypto is going to get hit too. Absolutely. Volatility, again, is your friend. If you don't want volatility and you're an investor, don't invest in equities. Don't invest in anything other than gold. Put a bunch of money in the bank. Because volatility is what makes us money in investing, right? We've got to see the volatility. What about investing in films? Anyone been there? No, I would say, think about this, right? If you were a film investor during COVID last year, you're not going to be a very happy camper, right? There's the risk that the movie industry got completely crippled. And before investing in movies looked like a good idea, I guess, unless you invest in a Hulk Hogan movie or something terrible like that. But it just goes to show you there is inherent risk in everything investing other than putting your money maybe into a government treasury bond. And you're just not going to get any interest and you're going to get eaten by inflation. But film investing is risky. Yeah, that's a really good point too. The reason I love cryptocurrency is because of the separation, the fact that I own it. Even if you own a pound note, did I just say a pound note? They don't exist. Shows my age. If I own a £5 or a £10 note, I technically really don't own that money. That could be recalled by the government, or a dollar, which is owned by the Fed. When I own a cryptocurrency coin, I own it. Nobody can take that away. It can never be recalled. Um, that's a good thing about physical gold. If you own physical gold in your hand, it's yours to do with whatever you want. I think that's good. But it's definitely a hedge. I mean, gold is an absolute hedge against market correction. You're just not going to get. I just don't see gold prices hitting 2,500 US dollars or 3,000 US dollars. So anytime soon. The DXY head and shoulders pattern seems to be working. Will the right shoulder work out? If so, gold and silver will go up and Bitcoin will massively pump. Yeah. Um, it's a good question. I don't know the answer to that. I don't always believe in that technical analysis too. I've seen sometimes where that is the case and other times where it hasn't worked. So most films are streamed now via Netflix, etc. So maybe okay. Yeah, I always thought it'd be interesting to have like crowdfunding of movies. Um, I think I think that's interesting. Like that we could come together, and I think cryptocurrency is actually going to make that kind of possible through tokenization, where people who want to make movies will be able to tokenize the finance of the movie, and you would be able to share profit through smart contracts in movies. Again, we're not there yet, but that's definitely going to come. And what you said, Robert, about movies going straight to Netflix is a really good point. But before that didn't exist, so that was a way the movie industry kind of evolved through COVID when they weren't able to show the films in the theaters anymore, so they had to put them direct onto Amazon and Netflix. But if you were a movie investor before that happened, you would have been a little bit nervous about what was going on. But I actually like the fact that movies go straight to Netflix now. I think that's great. I'm not forced to have to go sit in a theater with a bunch of snotty teenagers talking loud. What about investing in land or property? I mean, real estate is always has its place, right? Two things about that. Number one, you've got, if you want to be a buy-to-let landlord, you got to pay those extra taxes from the government, stamp duties, especially on rentals. That they're expensive. I know because I've been through it. And some of the returns in rental payments are not really that high. So got a couple of rentals in the pool area, and we're talking about maybe 3% a year, but you're hoping on that capital appreciation, which you think would be a good possibility. But as far as getting yield, some of those rentals are not going to yield well. Now, if you go up north, invest obviously in higher yield areas, you can do that. I prefer to keep it closer to where I know, But I don't think investing in real estate has always been a solid play. It's just out of the range of a lot of people because of the entry amount of money that you needed without going into debt. So if you want to take on a lot of debt, sure, you can go and get loans. But again, there's risk that comes along with that because we saw it in 2008. A lot of people got hurt by leveraging too much on real estate. If you can afford to pay cash or put down a really good down payment on a rental property, yeah, sure. As far as land, again, riskier for sure. I speak from experience. I've had my share of a bad land deal and a good land deal. So I did one terrible land deal back in, was it 2006, and I did a really good land deal in 2005. So again, risky, definitely riskier. Direct-to-video has been a thing for ages. Netflix is just a progression on that, true. But you know the direct-to-video was always kind of like the ones that didn't have the budget to go to the theaters, and they were never really did well. They weren't certainly blockbuster movies of Marvel, Batman, stuff like that. They were always some weird low-budget movies that went direct-to-video. Yeah, as Dave says, you can invest in REITs, real estate investment trusts, through ISAs. So, yeah, it's just a matter of knowing which REITs are good investments and doing your research in that. When do you think the crash will happen? Let me grab the crystal ball. Let's see here. Do you see a date? I don't see it. If I had to take a guess, I'm looking at two things. The 10-year yield in the U.S., so the U.S. Treasury yield. When that starts to spike high, that's when you should be concerned about the equity markets turning. And then, government stop money printing. That's when I think you'll see why do I keep saying property market? I think you'll see the equity market start to turn then. But I think you're looking at several months to possible year before that happens. But it's hard to say. I mean, these things can happen so fast. I mean, look how it happened in March. Even though that was definitely an anomaly, I think you're going to get some really good signals about when the market turns permanently. And again, 10-year yield, U.S. Treasury spike, starts to go higher. Look at the debt. The debt is a good way to really get indicators. Look at the DXY. And then just listen to what the federal governments are saying about when they're going to stop money printing. And yeah, I think definitely Mike says, look at some of the rubbish movies that go straight to Netflix. That's very subjective. You know what, Mike, what you think is rubbish, other people may think is genius. Is the market overpriced? Absolutely is overpriced. Of course. Yeah, everybody knows the market's overpriced. I think it is. I mean, it's obvious it's overpriced. Yeah. Anyway, I think that's going to do it. I'm going to get out of here. It's been a minute 08, a minute 09, way too long. Thank you for joining me. I hope you enjoyed the stream this week. Don't forget, next week we'll be back 7:30 UK time, and we'll do our usual wrap-up. Another interesting topic for you. Week after that, Louis Schwartz, CEO, LoanPad, live here. He'll be doing a Q&A. You can ask Louis anything you want, except maybe about his personal life, because he probably won't answer that. But thanks for joining. Appreciate you. Hit that thumbs up. Subscribe to the channel. And I will see you next week. Everybody be safe out there. Love you all. And have a great weekend. See you. Take care. Bye.